Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Let's get aggressive now and talk about some aggressive growth stocks with Bill Wilton, who is our aggressive growth stock analyst at Zacks.com. That's a lot to say, aggressive growth stocks. Metavante Technologies, MV, the ticker symbol. Is that how this name is pronounced?
Correct. At least that's my best guess. What they do is they do banking infrastructure. So a lot of the computer systems that they need for trust services, payments, deposits, and some business services, things of that nature. So it's interesting to see that they've got a lot of growth in such a struggling industry lately. But with all the action that's going on, their services are being used by just about everyone, so things are going great for them. They just announced their latest earnings surprise on February 5th. Revenue was up to about $1.7 million. They reported $1.38 a share.
$130. That can't be right.
That'd be
Bill.
nice.
You sure you pronounced the name right?
But so the estimates for next year are up as well. They're looking at about 12% growth through 2009, and they've beat in every earnings announcement since they started to be covered by Zacks in 2007.
Okay.
The next slide here, you can see our premium research tool. The valuations on this company are fantastic. The PE is just under 10 times earnings, and that's forward earnings. The PEG ratio is about 0.8. Meaning that the growth is reasonably priced. You're looking for anything close to 1, hopefully slightly under that, which is good. It's also maintaining a Zacks rank of a number 1, and it is a Zacks recommendation buy.
But the chart may not reflect all of that.
Well, you can see that it sold off a few months ago when all the banking related stocks got hit. But you can see the reaction that I've highlighted here from the latest earnings announcement. It did shoot up because of the great announcement. And since then, it's been tracing back slightly. They call that filling in the gap off an earnings announcement. It's not very uncommon. So if it does get back to that level that it was at before the announcement, look for either a strong rally, hopefully, or it'll probably stay about at that level.
Okay. And then Kensey Nash Corporation, KNSY, the ticker symbol. They design, develop, manufacture, and process biomaterial products. What does that mean?
It's essentially, components for orthopedics, cardiovascular medicines. They also have a puncture wound business, that sew up wounds. So anything that's going to need those biotype materials to end up producing the final product. So they distribute that to other companies that create those. Their last quarterly announcement was January 28th. And their earnings per share have more than doubled. They're up about 110%. This was a 10% surprise. Analysts were only looking for about 40 cents. They've also got double-digit growth for the next couple of years. Here you can see, again, it's a Zacks rank of a number 1 and our Zacks recommendation of a buy. Here's the chart. You notice a little bit of resistance there at about $22 a share, and it does have a slight upward momentum, which is nice. Hopefully, it can continue at that momentum, pressure that $22 a share a little bit more, and hopefully have a convincing breakout sooner rather than later.
Do you own either of these two stocks?
I do not.
All right, if you want to check out more of the aggressive growth stocks Bill has written about, go to Zacks.com. Over on the upper right-hand side of that homepage is where all of the Zacks rank buys are listed. You can just click on the headline that's right next to the aggressive growth category, and it'll take you right to all of the ones that Bill's written about in the past few days. With Bill Wilton, I'm Terry Ruffalo.